So Cisco dropped almost 12% yesterday. Should you be buying shares now? Hey everyone, welcome back to another video here at FiscalVoyage. My name is Felix, and in today's video we're going to do an analysis about Cisco and determine if is it a good buy right now after this 12% decrease in shares. But before we get started, if you're new to the channel, make sure to hit that subscribe button. And also, I have a free ebook on 5 quick metrics that I look for before evaluating a company. That free ebook, there's a link in the description, so make sure to check that out. All right, so let's look at Cisco system. As you can see here, Cisco yesterday dropped almost 11.20%, down $5.38. So just for context, during the March lows in April, Cisco got down as far as $33.71. And the reason for this drop in price is because, first off, you can see here, Cisco had its worst day in 11 years. And we're going to look over the press release and the earning report for the fourth quarter. And the biggest reason for the drop in price is because the company provided first quarter guidance of 41 cents to 47 earnings per share versus consensus of 75 cents. So you can see that's a big drop there. And revenue of negative 9% to 11% decline year over year, which implies 11.7 billion to 11.98 billion versus consensus of 12.23. So Cisco is anticipating a pretty bad first quarter. So this is the cause of the price drop. So not only did first quarter estimates is going to be pretty on the bad side, fourth quarter wasn't that great as well. As you can see here, fourth quarter results, revenue decreased 9% year over year. Non-GAAP earnings per share decreased 4% year over year. However, GAAP earnings increased 22%, so they saw good GAAP earnings there, but non-GAAP is where I like to look at. And for the year 2020, fiscal year 2020, revenue decreased 5% year over year, and however, non-GAAP increased 4% year over year, and GAAP to earnings increased 1% year over year. So in earnings, they did pretty well, but revenues did decrease 5%. So this is where the big price drop for Cisco. You can see here the Q1 guidance for fiscal year 2021. So again, the biggest reason for the price drop is because of the Q1 guidance, and a little has to do with the revenue decrease for Q4. So revenue, is looking to on the downtrend here. So a lot of investors, are selling out of the company because of this downtrend. So let's go to Morningstar here and look at some of the financials, health of the company. As you can see here, interest coverage of 22.44, which is outstanding. This is very, very good here with a debt to equity ratio of 0.45. That's also real good. Current ratio is good. Quick ratio is good. So the balance sheet based on these ratios for Cisco is outstanding. So let's look at fast graph here for Cisco. First off, I just want to point out S&P credit rating of AA-, which is investment grade. So Cisco has an investment grade quality company. And I also want to point out the consistency of the earnings. It's been growing quite nicely throughout the years. They have a downturn in 2008 and 2009 where it dropped 13%, but overall it's been increasing quite nicely. There's been some kind of flat years in 2014 with 2% growth and 2017 1% growth, but overall quite nicely. That's the type of earnings I like to see, continued growth of earnings, because if earnings continue to grow, dividend continue to grow. And the green dots here represents the position of when I bought shares of the company. In 2014, I bought 29 shares at $22 for $64, and I haven't bought shares since until earlier this year when I bought 26 shares for $41. There was time I could have bought shares of this company around this time here. I remember during this time I was thinking it was going to go lower, but it didn't, and then it just popped right back. But in hindsight, I should have bought shares there. But if we look at the closer chart here, as you can see here, the company, I like to use this custom valuation ratio, and I use a 12. I think anything under 12 represents a good buy. I bought here earlier this year because the market downturn, and I was like, oh, I want to get more shares of Cisco, and I did get in a good price. It went a little further down, but it picked right up, and then but now as you can see, it's coming right back down. I think right now the company looks to be fairly valued, not too drastically. It might be even undervalued slightly. But if I was to purchase more shares, I think a price under $40 is where I'm more interested in. So anything under $40 for Cisco is where I think I want to buy more shares of, because I have a pretty nice position right now and I'm comfortable with it. And because the company is fairly valued, and their analysts are estimating a negative 3% earnings for 2021, because as you saw, the first quarter guidance is negative. So I'm pretty sure the rest of the quarters is going to be down year over year. But I think because of that, is going to draw the price more further down. And I think a price under anything under 40 really would be a good buying opportunity. It should give you a PE around 12 or less, and that's where I think the best time to buy. So I wouldn't buy it right now because of the 11% decrease. It'll be okay to open a position right now if you haven't had it, but if you do, I think me personally, I'm going to wait for it to be under $40 before I buy more shares. So if we look at the analyst scorecard, they do pretty well actually in estimating Cisco. As you can see here, they hit 75% of the time in the 1 year and 92% of the time in the 2 year. Again, this has a 10% margin of error and 20% margin error for 2 years. But for the most part, they're pretty accurate with these estimates. So I'm pretty confident that Cisco more or less is going to be around $3.10 for 2021. So I think anything under $40 is a good opportunity to purchase shares of this company with a PE around 12 or even 12.5. So anything lower, of course, is even better buy. So let's look at the forecast for this company. Currently, as you can see here, with a PE of 12 is a pink line here. But if the company has a PE of 15, if it stays consistent with that PE of 15, which tends to be fairly valued, you get a nice total annual rate of return of 11.28%. But imagine if the company gets under this pink line, under a 12 PE, then that annual rate of return is going to be over 15, maybe even 20%. So that's why the valuation is so important, because it does huge dramatic change into your annual rate of return. So for the long term, analysts, they are expecting, which are 3 analysts here, expecting growth for this company. And with a PE of 15, even at a 13, you have a pretty decent rate of return of 8.51, and that, of course, that's based on yesterday closing price of $42.72. That's why I feel anything under $40 is a good buy, because this projection is going to help with your total annual rate of return. And if we look at the larger picture here of Cisco history, and you can see where times where these 12 ratio were great buying opportunity. Anytime here you see the price increase there, and anytime in this few year period, you can see here in 2011, 2012, 2014, this is when I bought shares. Anything under 12 PE was a great buying opportunity, and as well as over here in 2016 or in January 2016. But right now, as you can see here, I didn't buy it at that 12 PE because I really wanted to get more shares, and had a nice dividend yield of almost 4%. So I was very happy with getting that at that price. But my next buy would definitely be if the company goes lower than $40. So as you can see here, my cost basis is $31. So I'm still up on this company, and I'm going to continue to hold this company for a very long time. And actually, I work in IT, and I'm a big fan of Cisco equipment and products. But again, valuation is so important. So I think Cisco at $40 and less is a good buying opportunity.
There you have it. There's my thoughts on Cisco currently. I think it's a great company. That balance sheet is amazing. So the likelihood of being bankrupt or going under is very unlikely. However, the valuation, it's kind of fairly valued to slightly undervalued, but I think if the price were under $40 or further down, $38, $35, is an amazing buy at that point, because it has, as you saw, P of 12 or under. I think it's a great opportunity to purchase shares of Cisco. So I'm not buying shares right now, but if it goes under $40, I'm going to be much more tempted to buy more shares. So I hope you enjoyed this video. If you did, make sure to hit that like button for the YouTube algorithm. And if you're new to the channel, make sure to hit that subscribe button. And I'll see you guys in the next video. And make sure to check out my free ebook in the description.